Alright guys, so we took a 3% L on the account. I closed the trade a little bit more early because we already knew the trade was invalidated as soon as we started to move up higher and we formed this little fair value gap. The original stop loss was around here, so either way we would have got hit on the next two candles, or the next candle actually. So we just decided to close it a little bit early for 3% L instead of 4% L, and I was risking a little bit too much. Again, should not have been risking that much. The greed got to me. That's kind of another thing. The greed got to me. I was just trying to pass the account in this one trade. Since it looked really nice, it looked very promising, but it just wasn't ideal. Wasn't ideal in this scenario here, and we did have news at 10 a.m. so you can see that there. We probably could have waited for that, but either way, the market just started chopping around now, and it just doesn't look high probability. US 30 went up, Nasdaq went up, everything's going up right now, reaching into that deeper PDA right here, moving up higher now. We have in that market maker buy model form. We never really formed the 15-minute inversion, but we're gonna go over the trade right now. We could have prevented this loss, or we could have mitigated the loss a lot more than we anticipated here. So as soon as we met this low on the 3-minute here, I think we could have went to the 1 minute, and on the 1-minute time frame we had a 1-minute inversion there form, and we had a 1-minute SIBI. Once we started to move lower and we met this low, the stop loss could have been up here because this is an intermediate term high. You don't want to see the market move up any further above this high, and we want to see the strong displacement below. That's kind of another thing I was talking about, how I want to see strong displacement below and continue to move lower below this low and reach this low, but it just never really happened here. You can see that there. This could have been a like a small break-even loss. I would have taken that, like a 0.5% maybe, or maybe like a 0.25% L. I think that would have been a lot better than a 3% L. We could have mitigated this, but yeah, we just took this L. It is what it is at this point. The market is eventually looking a little bit more bearish here, but again, I'm gonna go for the confluences. This could have been break even as soon as we met this low. Order block formed, redelivered back into a SIBI, intermediate term high. You don't want to see the market move up any higher there. You want to see this order block hold, continue to push it lower, but it just never happened to complete the market maker model. We completed the fractal one, but I wanted to see the higher time frame one to be completed here, but it just never really happened there. So it is what it is. Gonna journal, gonna review, and this is more of a discretionary trade instead of my mechanical one. I'm debating about whether I should continue to just try to be discretionary or be mechanical. Right now, my mind is telling me to just go back to mechanical, pass an account, get a payout with a mechanical strategy, and then eventually start working on the discretionary skills after we already have some success, to elevate our trading. But I want to get there a little bit more quicker. I want to have a little bit more breathing room and just pass the account with discretionary, but it's going to take a lot more effort, a lot more time, and a lot more dedication to do that. But yeah, no, it just doesn't matter at this point. We took the L. I'm going to go over the trade here. So on the daily, again, I'm bearish here on the daily. Let's get rid of all this right here. So on the daily, we have a bearish inversion for after we are retracing back up into. On the 4-hour, we have a 4-hour bearish BPR. The 15-minute time frame, we had a 5-minute SIBI there, but on the 1-hour time frame, we have a 1-hour SIBI there we are retracing back up into, and we are sweeping these highs. This is another thing I saw. We had a bullish order block, but again, we're sweeping the highs. We're unable to close above. We're waking up and then coming back down. To me, that seems bearish. And then on the 15-minute time frame here, we had a 15-minute change in the state of delivery, and to me that confirmed bearish order flow was coming in. But the market is just simply chopping around now, and it is what it is at this point. We had one sweep, two sweeps, and then a third sweep up there. To me, that was a 3 drops pattern, and that looked like it wanted to move lower, complete this market maker model, and just go back to the downside here. And then on the 5-minute time frame, we had a 5-minute of course BISI here, which got inverse, and then eventually we started to move lower. We did have a 3-minute one also. We did look a lot more bearish. If we waited for the inversion to be retraced up into and we traded that, I don't think we would have got hit out, because our stop loss would have been above here, but the trade would have been just chopping around waiting. And I think that wouldn't have been I think it still wouldn't have been an ideal entry in my opinion. It would have not been that. And then on the 5-minute, we formed the 5-minute Abyssi, another one, and then we made an inverse, and now we're retracing back up into it. You can see we are not holding it. We're not pushing with speed to the downside here, so the market is simply chopping around. And our entry was the 3-minute. So the 3-minute SIBI here, which we did retrace up into, and the inversion. So it was like a bearish BPR here. So yeah, we retraced up into it, we entered, and then eventually we started to move lower, and then we came back up. So after sweeping this low, I think I should have been a little bit more wary. I think I should have moved the stops to break even right then and there. Yeah, on the 1-minute, that could have been able to prevent the the big loss. It is what it is at this point. I'm going to review this trade. I'm going to go back to studying, reviewing, analyzing, tape reading right now, and yeah, just reading the market with a neutral perspective. No trades. The account is at 0.31. Again, now all I want to do is risk 1% until we have a buffer of 2% or more to risk 2% or more, and I'm going to be trading more of my mechanical strategy. I'm going to go back to it. Even though the trade frequency is very low, I think I'm just going to continue to demo trade my discretionary skills, and just continue to do that and try to get better there. But for right now, I'm going to go back to my mechanical strategy where I have multiple charts loaded up, like this one right here. I have 2 charts loaded up and I'm just trading that. Yeah, that's pretty much really it. I'm going to continue to stick to 1 trade a day, trading those markets. The main thing I really need to do is work on my risk management and just not be greedy or impulsive, rushing entries, trying to do this and that. So that is pretty much really it for the account here. You can see we had a $142 loss, which is close to 3%. You know, the bias, I think the bias will be correct. I just don't know when the market will start to move. It probably will just chop around, wait for next week since the elections are here, and price action isn't best. You know, price action isn't the best right now. So I'll probably wait till after the elections to start trading. I think one of these markets would have been better to trade instead of gold right now, but it is what it is. So yeah, peace.